All right, welcome everyone. मेरे साथ हैं पंकज पांडे sir, and we are here for a weekly wrap. Once again, sir, another all-time high. This has been consecutively multiple highs, and every portfolio is pretty much in green, and everybody's happy. What's going on, and what's the outlook from here, sir?
So hi, good evening, Vishu. Like you highlighted, we continue to sort of make new highs. I think this is the third successive week. We have made a new high. Nifty has gained closer to 2% odd. The mid cap index also has sort of made a new high. I think last 3 weeks we've seen Nifty gaining 1,500 points, and so that is sort of quite a massive rally. I would say in a shorter time frame. And this is slightly giving, or with this rally, it looks like we are in a slightly overbought situation. Good part is that, see, when you look at the contributors, so metal as a sector has really not been doing much. So that has started to sort of contribute. IT also has been one of the sectors which did well initially, and of late, again, there were concerns, but I think that has also started to sort of do well. So you see good amount of sector rotation, which is sort of happening. And from that perspective, it looks like overall things are good. Structurally, the market remains, or the market uptrend remains intact. Or I would put the next important target for Nifty to be about 27,000. But I'll not be surprised if the market sort of paces down a bit, because see, you have already seen 1,500 points rally, and probably post that some bit of a consolidation in the range of say 25,800 to 26,500 is very much possible given the sharp run up what we have seen. But structurally, things are intact. Sectorally, we would expect some of the laggards like say PSU banks to do well. IT and metals will continue to remain focused, and yields have been sort of declining, and that should act as a good catalyst for PSU banks to sort of do well.
Right, sir. Sir, of course, matlab, markets have all been good, and I think US also had an impact on this, US rate cuts.
Absolutely. So I think, see, why US is important is that you look at two sectors, which is the big sectors. One is IT and the other one is BFSI. BFSI has done well post the surprise or largely factored in a cut of 50 bips by US Fed. And what was expected after that was a risk on follow-up on the risk on sentiment. And obviously, it will come along with higher inflows. And that is what has exactly happened in the market. I mean, look at, we have seen inflows of 50,000 odd crores in the month of September itself, which is again quite a sort of a massive number. Obviously, some bit of is also attributed to the MSCI or the FTSE balancing what we have seen. But first time we are seeing large cap sort of doing well. Nifty has sort of moved up by 3%, whereas the small cap index is up only 0.25%. So clearly the FI flow is largely biased towards large caps, and which is what is clearly sort of reflecting. And last, when you look at this year, we have seen about 91,000 crore kind of inflows. And last 1 year, the inflows are about closer to 1.5 lakh crores. So all these inflows are definitely good for banks. And IT, I think overall, we've seen things improving a bit for the IT. And so both IT and BFSI tend to sort of do well with better traction in US.
Right, sir. Sir, talking about rate cuts, I think China has also is also planning to cut some rates, and there's a stimulus announcement as well on the cuts.
So if you look at China has been coming up with measures of late to revive their economy, and this has been going on for the past 6 to 8 odd months. This time, the efforts are even more. So they've gone in for lowering the interest rates on existing home loans by half a percentage point. And even for people who have bought second home, I think the overall requirement for bringing the minimum down payment has been brought to about 15 odd percent. This was 25% earlier. Now, what it does is that it overall revives the or improves the sentiment and the demand for steel there. That is what the hope is. Because if you look at overall, China has been sort of producing a similar amount of steel. And since they can't consume domestically, they have been sort of exporting that or dumping that, and which is where things have been troublesome for those respective geographies, including India. I mean, a case in point is that you look at the prices domestically. The domestic steel prices are at a 3-year low at about 47,000 rupees per ton. This used to be about 74,000 quite some time back. So we've seen quite a sort of a sharp decline in the ferrous prices. Now, while Indian companies are obviously cost efficient, because when you look at steel companies, you look at how cost competitive they are. But if so much of a inflow happens, obviously it impacts their financial as well. With this rate cut from the China, I think the overall scenario for steel stocks to sort of do well has sort of improved a lot, especially domestically. And we feel that JSW, because of the ambitious growth plan, I think this company looks good. It is one of the most efficient players. Then NMDC, which is the largest supplier for iron ore, and with a cash-rich balance sheet, that is another attractive stock. So we are liking both the stocks. And on the non-ferrous side, Hindalco is driven by the demand for aluminum and copper metal. And those also have been doing well because of the focus on the automobile side and on the renewable energy side. So that is another stock which we like with a target price of 825.
Absolutely, sir. Sir, I think another big news was with Accenture and its splash of GenAI. So, what is happening there, sir?
Yes, so when you look at Accenture, I think it is considered to be a guiding light for the IT industry. Accenture reported their numbers. So they reported a very healthy revenue of about $16.5 billion, which is up about 3%. And I think margins also was decent at 15%, up about 10 bips. New bookings also have been good at about $20 billion. What is really liked by the market or cheered by the markets today is that when you look at their overall guidance, FY24, the guidance was 1.5 to 2.5%. Now for next year, that has gone up to 3 to 6 odd percent. Usually, Accenture, whenever it used to give guidance, it used to achieve the lower end of or the mid number of the overall guidance growth. But this time they have achieved the higher number of or higher band of the guidance, and which is why things or market is liking that aspect. Otherwise, yes, on the GenAI front, they've done well. They've recorded revenues or $1 billion of new booking, and the overall revenues were 900 million in FY24. And also, the company has signed new deals worth about overall $20 billion. So I think the strong performance by this company, and along with a better guidance of 3 to 6 odd percent, I think is far better than the market expectation. And obviously, this includes a 3% kind of inorganic growth what they've built in. But overall, I think while there's some cautious commentary coming from the management, but the achievement has been pretty good, and which is why it is giving a hope for a upturn in the discretionary spending, which is where the Indian IT companies do well.
Right, sir. Sir, I think the only thing that's as big as GenAI today is, of course, the focus on renewables or low carbon emitting alternatives. In this, CNG as a sector becomes more and more important from a lot of variety of perspectives. So, could you help us understand a little bit more what's going on in the sector?
So in auto, if you look at, obviously, you see the bigger trend which is expected to pan out is selling of more of EVs. But in the interim, what you're clearly seeing is that the CNG demand has been very good. One obviously is that when you look at the running cost is 3 to 5 kilometers. This is quite lower compared to 7 to 10 kilometer per kind of a cost which you incur when you use IC or the petrol or diesel cars or vehicles. Now, overall, when you look at from the domestic PV side, their share used to be about 7.5% a few years back, and which is now inched up to 15%. And again, this expectation is this will further inch up to 22 to 27%. So while on the overall environmental efficiency side, if you look at CNG is definitely doing better in the medium term, but our sense is that EVs are definitely going to rule the overall market with a higher share. I mean, you look at countries like China, their overall EV share penetration is about 50 odd percent. So from that perspective, we are also sort of going to trend on those lines. Why this is sort of also happening is that when you look at most of the Indian OEMs, so Maruti, for example, one third of their cars sold is a CNG vehicle, and they're guiding for 25% kind of a growth on a YoY basis. And when you look at the overall PV portfolio, they are looking at a 5 to 6% kind of a growth this year. So definitely CNG is doing better. And not only Maruti, in fact, if you look at Nexon or Tata Motors has also launched a CNG version. So that is also there. Then even Hyundai has also launched. And also, we need to keep in mind that the government has also been looking to upgrade the CNG infrastructure. So, about 1,200 new CNG stations have been added. So now that number stands at about 5,600 odd. And the amount of CNG stations, if you look at in the last 4 5 years, that has grown at a pace of nearly 34%. So obviously, infrastructure is also getting upgraded, and which is why you're seeing this demand for CNG vehicles to be good. The prime beneficiary of this is definitely Maruti.
Right, sir. Sir, I think Vodafone India also saw some disappointment in terms of Supreme Court rejecting its curative petition on AGR case. So, how do we see this thing panning out from here on?
So yes, I think post the Supreme Court rejection of the this telecom company's curative petition, I think all eyes are on the government. Good part is that in their recent con calls, the company highlighted is that their capex plans remains firm. So they are looking to spend 50 to 50,000 odd crores over the next 3 years. Now, where will this money come from? They have already raised about 24,000 odd crores. Plus, they are looking to do a tie-up of loans of about 25,000 odd crores. In fact, they have also signed a deal with the suppliers, say for the likes of say Nokia, Ericsson, and Samsung, to the tune of about 30,000 odd crores. And since the company is going ahead with the capex plans and you need money, so obviously there is a feeler. What you get is that government might take some measures which will help the company to maintain their capex pace. And that has led to some reversal of the sentiments because post Supreme Court's decision, the stock has taken a big knock. But lastly, all eyes are on the government that, for example, for the loans of 25,000 crore, which they are looking to raise, obviously they need some comfort from the government, and which is where I think the government's effort or government comes in focus. And when you look at their overall AGR dues, so they need to pay about 29,000 crore in FY26, and from FY27 onwards, it's 43,000 odd crores. So one relief from or some comfort from the government, and the other aspect is going to be further tariff hikes. Not to say that it is going to happen in a near future, but these are the two key things which will decide the fate of Vodafone Idea. So keeping fingers crossed. So let's see what unfolds.
Absolutely, sir. So the next sector that seems to be struggling right now is the microfinance institutions. News after news comes up and something happens there. So how are we looking at it now?
So yes, Rishi. So I think this is one segment which is not really doing well in the market. In fact, some of the stocks have taken a beating of more than 40 odd percent. And this is largely coming from the slight weakness or the weakness what you see in their portfolios. I mean, take an example of Fusion Microfinance. So this company guided that they have reviewed their credit portfolio, and their provisions are going to jump up from say 350 odd crores in the last quarter to now about 500 to 550 odd crores. So nearly 50% jump in the provisions. And so they're taking a lot of measures to improve the credit criteria and also the collections. So there is a bit of a challenge or asset quality deterioration which you are seeing in the MFI space. And obviously, one impact of that is going to be on the moderation in the business growth because this segment had done well in the recent past. But now asset quality concerns are being there. The other issue is that if the asset quality comes in, then the funding from the banks also can sort of be a sort of a challenge. So that is also another issue which is going to be there. So at this point in time, I think despite the price or the kind of price correction we have seen, one should not really be chasing this space until the signs of stability sort of emerge. So one should stay cautious in the MFI as a space at this point in time.
Right. I think, sir, on the flip side, there's another sector which is getting strong visibility ahead, which is the power transmission, with a lot of plans being announced for by the government. So, how do we look at that?
So yes, power is one sector which is looking good from a decade perspective because power is the core to a lot of sectors. We have already seen government announcing mega plans in terms of adding capacities of nearly 500 gigawatt on the overall renewable energy side. So that is once you are sort of doing that, obviously you need capacity for the transmission side also to go up, and which is why they've come up with a plan of an investment of about 9.15 lakh crores for upgrading the overall power transmission sector. Now, what they want to achieve is nearly a 50% jump in the overall transmission network, say from 4.85 circuit lakh kilometers to about 6.5. And the transformer capacity is also expected to inch up, say from 1,200 GVA to about 2,342. And obviously, when you're sort of adding this, it leads to an opportunity because for all the players who are operating in that ecosystem, even for the interstate transmission capacity, I think you are looking to add about 50 gigawatt kind of a capacity. And for high voltage also, because when you're transmitting power, you need to have high voltage transmission lines. So there also you are looking to add about 33 gigawatt kind of a capacity. So you're looking to sort of increase it from say 119 gigawatt to about 160 gigawatt. So the kind of capacity expansion you are seeing on the transmission on the power generation side, something similar is happening on the transmission side. So things are getting a lot more serious there. However, we like the traditional players like say, NTPC. NTPC is expected to come up with their IPO as well for the renewable energy arm. So I think that remains our topic in that space. And like I said, power is going to be a sector for the decade.
Right, absolutely, sir. And so finally, our last segment of the show, which is Hidden Gem, which will it be this week?
So rate cuts are around the corner, Vishu. So interest rate sensitive sectors should do well, and which is why I'm recommending L&T Finance with a target price of 225. Now, this NBFC has achieved a retailization of 95% of their book, and they've been running down their wholesale book, and further ram down in their wholesale book is expected. And what it does is that it improves your yields and also the return ratios because you'll make lesser spreads in the wholesale book. And overall sense is that company is going to focus on two segments, which is home loans and LAP. And they'll be very selective in segments like, say, personal loan and MFI. We already spoke about MFI as a segment being under pressure. Good part is that this company is looking to sort of deliver growth of 18 to 20%. So basically, they're looking to increase their overall book or AUM from 1 lakh crores to 2 lakh crores going forward. And this is going to be largely or majorly retail. And so from that perspective, things are looking good. Provisions for this company is expected to remain steady. Asset quality is expected to remain steady. What you will get is a healthy ROAs of nearly closer to 2.9 to 3% in the next 2 years. This is about 2.8 odd percent. So we'll see a further improvement there. And this good part is that it is trading at an attractive valuation. So even if you are sort of valuing at 2 times, we get a value per share of about 225. And obviously, rate cuts do benefit NBFCs more than the banks initially, and which is why we are recommending because Fed has already cut rates, and it's time for RBI to deliver on the rate cuts. So with that in perspective, I think we believe the stock should do well. L&T Finance with a target price of 225.
Awesome. Thank you so much for that, sir. Well, that was our weekly wrap. Thank you so much, everyone, for watching. If you have any questions for Pankaj, sir, please do comment them down. We'll be back next week. See you till then. Thank you so much again, Pankaj, sir.
Thank you.
Investment in securities market are subject to market risk. Read all the related documents carefully before